Hey everyone, welcome to another episode of the Crypto Collaborative Podcast. My name as always is Tyler, and this is our founder and CEO, timnihill. And we've got a lot to discuss today, don't we?
We have a lot to discuss every day.
But this one in particular is a day of great interest, wouldn't you say?
Yes.
So, it's no secret that broker-dealers are going out of business all over the country. We won't name names, but, I mean, my God, that entire industry is just collapsing in on itself.
How are all my former peeps at Commonwealth doing?
Yeah, exactly. So, we're going to be talking a lot about that today. Tim obviously has
Make sure you hashtag Commonwealth and LPL on this one.
Oh, we can name drop those ones?
Well, they're big firms, and,
yeah. But we're going to be talking a lot about that topic today, so be sure to stick with us through the conversation because this is something especially that's really on the cutting edge of where the industry is going, where the sector is going. You know, traditional broker-dealers are just not able to withstand the trends that are happening right now. So,
bye-bye.
I guess the best place to start is, we've worked with many broker-dealers. We know many broker-dealers. You know, you've personally spoken with many broker-dealers. When did you first...
Spoken with? I've built them.
Yeah. But...
let's just be serious and honest here. We're going to have honest conversations.
Oh, no, we'll get to that one for sure.
I'm beyond this, the BS that's out there. And in my world and from my standpoint, most of everything in finance is fraudulent. So let's just talk about this.
Yeah.
Open, airing conversations. Let's just have some honesty.
Yeah, no, honestly, let's just get right to it. The first thing I wanted to ask was, when and how did you realize that, because we've talked a lot about when we realized that certain things were going the way they were going, but I'm kind of wondering, when did you realize and how did you realize in particular that broker-dealers were not going to be able to weather this change that the industry is undergoing?
So way back when, we're the first broker-dealer and group of people to take on fiduciary responsibility in the advisory world.
That being Commonwealth?
Well, I was at Commonwealth. So there's a designation called the Accredited Investment Fiduciary. At the time, Donald Trone was one of the faces of the AIF program, and we were putting advisors through. So while we were doing a presentation in Waltham, Mass, it was like our second group of people going through the training, and Donald just happened to drop, you want to talk about revenue sharing, why don't you talk about how much juice your broker-dealer is getting off of their money markets, right? Mm-hmm. And, for every dollar that was going into the money market, I think we're getting 50 to 60 basis points at the time. It was like 40 to 60, if I'm not mistaken. Either way, the money markets are juiced. So I just remember my friend Scott running down the hall to my office, and I'd never seen Scott run before except on a basketball court. And I go, uh-oh. He's like, Tim, here's what just happened. And I go, Scott, are we juicing our money markets? He goes, yes. And I go, don't you think we should be transparent about that? No. And then two partners showed up, and what are you going to do? So,
why didn't you want to be transparent about it?
Because nothing is transparent in finance. Why do you think we have our own nomenclature? And this is why they hate digital assets and crypto. It wipes them out. Mm-hmm. Transparency sucks for people that are... Oh, speaking of fraud, there's that guy from Sam Bankman-Altman from FTX. Mm-hmm. I met the guy, and there's not a chance in hell I would ever do business with that guy. So...
You've met him?
Yeah, met him at a conference a long time ago.
Oh, wow.
And he's like, oh, we're the best. And we're like, dude, I got a bad feeling about this guy. Kind of like with Madoff. I had a buddy who uncovered Madoff before that blew up.
Really?
Oh, yeah. He said he was on the ops and compliance side of things, and he was just looking at Madoff's numbers. He's like, there's not a chance that this is real.
It just doesn't line up.
Yeah, and they were lucky that, we were able to pull out. I didn't have any money. We didn't have any money in it, but one of the business partners had a bunch of money, and he was able to pull out before that whole thing blew up. But anyways, let's talk about broker-dealers, and let's talk about why they're going away. first and foremost, look at the people that have and are affiliated with broker dealers that are older, that have been in the business for 20, 30, 40 years, right? They all came up through the channels and they might be independent. The broker dealer situation for the older advisors are strictly around the fact that it gives them an opportunity to sell their practice to somebody else so they can retire.
Mm-hmm.
Right? Like if you're within LPL, I think they have like 32,000 other advisors, 35,000, if I'm not mistaken, based on conversations I've been having with some people. And they're like, yeah, when I want to retire, I got 35,000 people to sell to. And it's an easy transition. So you're going to get the older generation of advisors are now going to start retiring and selling off. So once that happens, the broker-dealer, in terms of being able to facilitate that transfer, makes it very easy. So they still have utility from that perspective. But every person I talk with says, if I had to do it over again, I would have started on my own and gone RIA only. I would have never messed with broker-dealers.
So many broker-dealers who are going out of business these days are almost always saying the reason they're going out of business, again, without naming names, but like by and large, the major reason why a lot of broker-dealers that are going out of business are saying they are is because they just don't have enough sales. The sales are not outweighing the costs of operating the broker-dealer.
Right. So you have, on a declining scale, assets under management. You have the next generation of technology, and you have the next generation of people that want nothing to do with financial advisors. Like, on our family office side, there's not a client that we can't take from somebody else if we want to. Not that we're in that business to do it, but the work that we do is the work of the future advisor, if you will. And it's all family office, structure, organization. It's not financial planning. It's not asset allocation. It's not retirement. All of those things are dead, right? So when you look at it, what do broker-dealers really do? They provide opportunity for sales, right, to somebody else.
Yeah.
You can outsource your infrastructure and compliance and operations, right?
Mm-hmm.
A lot of them have asset management, investment management, due diligence.
Mm-hmm. The whole works.
You know, but here's why they're going away. Everything that they bring to the table is gone. So you need a broker-dealer to facilitate transactions and generate commissions. Well, commission business is gone. Period, end of story. Like, people don't want to pay commissions. Younger generations don't want to pay commissions.
Yeah.
And
nor do we want to deal with all the compliance. I mean, especially as someone who,
right.
Works in compliance now, having formerly dealt with, broker-dealers compliance. Compliance in today's day and age, and this is an episode in and of itself. I know we've talked a little bit about it before, but compliance in this day and age does not need to be as draconian as a lot of broker dealers make it out to be, because they do so out of this excessive abundance of caution, and they justify everything with, we need to follow this law and this law and this law, and that's the cornerstone of compliance, to be sure. That's why compliance fundamentally is making sure that a company is following the law, but there are ways of doing it that don't hamstring the entire corporate process, and there are laws that are important that need to be followed, and then there are laws that, obviously you got to follow all of them, but in the sense of, like, there are some laws where, you have a little wiggle room, like you have to get this done by this date. You don't have to do it immediately. Like, there's a lot more wiggle room than these broker-dealers make it seem like it is.
Well, sure, because most broker-dealers' compliance departments are told, we have to protect the firm from lawsuits. So then, we have to say no to everything, right?
Yeah.
Like when I was at Commonwealth, we were taught you gotta figure out how to be able to do it. Say yes, we can do it. We'll figure it out. And if you can't, you can't. But at least you take a shot at it. So
I got a friend who recently shared a really amazing acronym with me that I carry, and the firm as a whole carries in its compliance operations. FITFO. You ever heard of FITFO?
No, I don't think so.
Figure it out.
Oh, yeah, that's a good one.
Mm-hmm.
Well,
you can never say no. You have to say, you can never say no. You have to say how.
Right. And so here's where everything gets replaced. So all the rules and regulations are going to change. All the fiduciary standards are going to be rewritten. We're no longer going to be operating according to rules and regs that are in the 1930s and 1940s.
Mm-hmm.
So you're going to get all new standards. Then you're going to have this next wave of Gen Tech come in to where, okay, we already do this on our own, right? We have our own and are developing our own AI solutions where our compliance is run by mostly computers with oversight.
Yeah.
So if I have a compliance department, and let's say I have 100 employees in my compliance department, I could fire 98 of them and have everything run by tech and AI.
You don't need 100 employees. You don't even need like 10 employees in your compliance department.
That's what I just said. So I just fired 98 and I kept 2.
Mm-hmm.
So now I'm skinnier on the compliance side, and if I have any wherewithal on my own and can do this on my own, then I just eliminated compliance for the most part. Second part of it is operationally, again, I still have the touch, but I still can eliminate with next gen tech 90% of operations people. Because now I can do it better, faster, be bigger, faster, stronger, and more nimble, right? And so my operations team is completely gone. And then at the same time I'm looking at it, asset management's gone, completely eliminated by next gen tech. Mm-hmm. You're going to tell me that your 50 people investment department can do better risk analytics than I can when I can replicate what I had at BlackRock with Aladdin and then customize it to my philosophy. So I just eliminated your investment management team. And oh, by the way, I ran into this problem with a previous broker-dealer because I created a model that was crypto-based and it beat their best model by over 100% in 12 months. Right? So, sorry, S&P 500 and all these asset allocators are gone. And then now you have the tokenization of everything. And literally, I was on the phone with a couple of people yesterday that are very much in the know. And we all are saying the same thing. Your stock market is gone. Your bonds are gone. Mm-hmm. Like, people are not ready for this transition. Everything that you've been doing for 10 to 20 years has been eliminated. And you better get on board.
Even people in my generation who are much more forward thinking on these issues still instinctively, like I'll see people, talking about, this or so being digitized and that and so being digitized. And then in the same, day, like later that day, they'll be like, oh my God, look at the oil futures.
Yeah. Well, I mean, we've been loading up on all this stuff way before all this of what's going on is happening. So you have basically, if you're an advisor out there, you have less than 6 months before you're going to see how you're about to be eliminated and put out of business. Mm-hmm. And broker-dealers too. So
how quickly AI is already...
Let's take the hardest thing that you can do in the field right now.
Mm-hmm. It's just so crazy how quickly it's already gone in the past, year or so.
Yeah.
Just wow.
And we're 2% there so far. Hardest thing to do in our world is due diligence on alternative investments. Mm-hmm. Guess what? You have your own AI, your own technology. You teach it how to read a prospectus. You give it the red flags you're looking for, right? Because we know where to look at deals and what makes them bad. Mm-hmm. On top of that, the technology can do analysis and due diligence way better than a human being can. So then I can rip through a 300-page document within 5 minutes, have an entire scoring system built around it, and analyze every single piece of information that I need to, mm-hmm. including the background of all of the founders and personnel that are bringing these investments to place. And I have access to information that I normally don't have access to. So at the click of a button, I have an entire alternative due diligence program coupled with my risk management program, all running simultaneously, where now I get my reports in 5 minutes.
Yeah.
So instead of having somebody read through 300 pages that takes a long, long time. I have my compliance guy here that does it for us. And it's instantaneous.
Yep.
So now I've eliminated the broker-dealer's investment management firm, and I've already proven that they're not up to speed because our models kick the crap out of any investment model out there. And then on top of that, I have a whole due diligence platform where I just replaced the entire due diligence team. And my accuracy level just went from, 90% to 99%.
Mm.
Right? I tell people nothing's 100%. Like, everyone was brainwashed in school. Like, even the nerds that got 100%, they didn't get 100%. They had to get bonuses and extra credit and all that jazz. Mm-hmm. Right? So, if you can get your batting average in this to where you're batting 950 out of 1,000, that's pretty dang good. So now I just increase my level of due diligence and oversight. I have a due diligence platform that is insanely solid that no regulator is going to ever question because of the technology. And so I don't need a broker-dealer's compliance. I don't need a broker-dealer's investment management team. I don't need a broker-dealer's alternative investment due diligence. I don't need their operations. I have better technology software like we have with Strad, where we're doing full family office stuff.
Yep. Shout out to Strad.
It's shocking. It's shocking for people when they see the way they should see their net worth together and they realize they have more than what they even think because everybody is so programmed to look at a statement. And now let's talk about the fraudulent markets.
Yeah, this is where it gets interesting.
So now broker-dealers are sitting there saying, okay, everything we offered's basically been eliminated, right? Because I don't do insurance through a broker-dealer. By the way, if you haven't been in digital assets, still aren't in digital assets yet, and the entire world is moving to digital assets. Oh, buy an ETF. No, don't buy the ETF, you clown, because you need to own the asset. And then it gets into the structure of ownership. Who owns the actual asset behind the scenes?
Yeah, ETF is a very clever way that these companies use to disguise, the products. Like they'll say, the news will say, and the companies will say, and the products will say, this is going up really crazy. I mean, look at how powerful this is, and then they'll point to the ETF, and it's like, but this is not ownership.
When they get rid of naked short selling in the markets, all hell is going to break loose. We are in World War III, and I was literally on a presentation with a company that's out west right before we did this. People fail to understand that globalization has fallen apart, and it's been something that they started putting into place in 1990, 1991, right? Mm. So think about that. 35 years of everything that's been done just fell apart. We are in a war for metals, right? So metals are going to rip. And what don't you do as a broker-dealer? You don't do any of it. You don't do oil. You don't do gas. You don't do energy. You don't do commodities. Mm-hmm. What are the safest investments in the world right now? Gold, silver, and Bitcoin. And you have to have ownership. ETF doesn't give you ownership. So now every financial advisor that doesn't buy Bitcoin and physical gold and silver for their clients is out of business because they're going to miss the biggest trade of their lifetime. Mm-hmm. And they have not done their protections and jobs on the wealth management side.
It's so funny, especially when everybody was going crazy however many weeks ago about silver, and we're just sitting here like, really? You're just thinking about this now in 2026? Right. Now?
So, and then think about this. Let's say, what's the biggest thing for everybody that's led with from an advisory perspective? Retirement planning. That's gone.
Yeah, we've done a whole episode on that one over the sister channel.
On average, our clients retire before the age of 54. It's like, I don't know why people are waiting to 72. That's insane. On top of that, if they get this tax thing through where they say there's no more income taxes, well, why would I put money in a tax-deferred IRA account in 401k? The second that you hit the button and say no income taxes, every single retirement account gets liquidated immediately because they're not liquid investments. And the concept of retirement is dead. Elon Musk just killed it. Tony Robbins killed it. They just destroyed retirement planning. So now that's gone. Your financial planning software is gone because that's completely eliminated, because what I can do with technology is insanely accurate and way beyond what eMoney and eMoney Guide Pro can do. Like, broker dealers and even advisors are toast.
Mm-hmm. Well, we already knew advisors were toast, but especially broker dealers are whole system.
Advisors that adapt now win. So if you're out there managing $1 billion, understand that $1 billion is coming to groups like me.
Mm-hmm.
It's coming to groups like us. Like, we're the future wave of wealth management in the world, not just the United States.
So here's a question. Along the same vein as, and we've talked a lot about this on both this podcast and our sister podcast, much more in detail over there.
The Bridge.
So go check the episodes of The Bridge out on our sister channel for our main. But what I wanted to ask about is, one of the things that we've talked about a lot, obviously, given, our main company is a family office, is that the family office structure is what is really coming about as far as the way that modern advising is going. A lot of, advisors are using that structure now because it's just more conducive to staying solvent, among many other things.
I don't think most advisors are adopting yet.
Really, even before?
Yeah, most advisors are complacent right now. They're not. There are very, very few people that actually do what we're doing. And you see it like on YouTube and all this stuff. Like, you have these people that, I took a family office class and I do family office and I'm pumping crypto.
Yeah, okay, that's true.
Which is ridiculous. Like, you have to be able to bring this to people's dining room tables and kitchen tables. But the future of wealth management is the family office structure, and it's aggregated family office structures.
Yeah, but that's what I wanted to get at. In the same vein as that, do you think that the broker-dealer structure as a whole is doomed?
Yeah,
or
it's gone. Gone. It's doomed.
There will not be a single broker-dealer left in 3 years.
36 months, they're gone. Because at some point, one of the bigger firms, could be a wirehouse, could be independent, whatever, they're going to get into and be part of class action litigation because the way they structure their business is actually does not represent the best interest of the investor, their beneficiaries, or their estate plans.
There's no way for them to adapt at all?
They would have to unwind everything that they've built.
Which is basically not even adaptation, that's just disbandment.
Right. Like, when you're forced into structures and you're forced into limited product solutions and investment recommendations, not because they're in the best interest of the client, but because they're in the best interest of the platform, mark my word, this is coming. You could bury your head in the sand, take the ostrich approach, but I promise you that a major firm will be part of a class action litigation that they are going to lose. And when that happens, all hell is going to break loose. And this isn't, I'm doing this for fun. I don't have to do this, right? But this is just the work that needs to be done in the advisory community. It's the same as you need to start becoming a fiduciary. You need to start having investment policy. You need to start having structure. You need to adopt ETFs and 401ks and all this jazz.
So then, I guess
all of that now is going away.
So here's the final question I'll pose to you, just to paint a bigger picture of what that looks like. The hell breaking loose. What does that look like when that happens? How are the broker-dealers going to die?
Because all of their clients are going to pull their money and transfer it elsewhere. Period. End of story. I just said I can manage $100 billion with the 7 to 10 people I have today. That's how insanely efficient we are now.
Mm-hmm.
Think about that. Like, I have 1 or 2 other people I'm going to pick up to do some various things to help out, and kind of take some heavy lifting off of my plate. But honestly, if I can manage $100 billion and be more profitable and do better things than the people that are managing $1 billion and a half right now, assets are moving. It's already happened. So while people are out there trying to, you have to change the lens and get out of your traditional finance lens.
Yeah.
And you have to understand that in the traditional financial space, you have zero ownership of your own assets.
Mm-hmm.
And people are waking up to the importance of ownership.
Yeah.
And this war in Iran, the United States just took over Venezuela. They're going to take over and knock out Iran. And there are like 4 or 5 other countries that are behind it. Cuba's next. They already said Cuba's going down. They are forcing everyone to a global blockchain. And you're either on it or you're not. And the people that are not on it, the ones that have adopted and adapted, are the people that win. Right?
Yeah, because fundamentally, we've said a million times this is where it's going, but more than that, when you, we've talked a lot about how all of these varying, independent, decentralized finance systems are coming about, but Bitcoin fundamentally,
Yeah.
the blockchain in general, but Bitcoin in particular, is the safest, the quickest, and the most stable.
Yeah, and most people don't understand Bitcoin.
Mm-hmm.
And
But this is fundamentally why advisors, family offices need to adapt, not just because this is what's happening, but for the personal sake of the solvency of their businesses, because, like you just said, the way the hell is going to break loose on these broker dealers is investors are going to take their money out. They don't want to waste
they're
time.
going to have a run on assets.
They don't want to waste time on these insolvent broker dealers that don't have the structure to respond to the way these things are going.
Exactly. And people are starting to find out that they don't own their own assets and they don't have liquidity. Everybody's waking up to this. And when you're watching what's happening right now with the spiking of metals, with the increased pricing of oil and gas and all this stuff, it's not going back to normal. Like, the S&P 500 as an investment default is dead.
Mm-hmm.
Your asset allocation is toast.
They should just call it the P500.
Yeah, it's here. It's not coming. It's here. And if you think that, oil's going to go back down to 40 again, you're nuts and wrong. I come from the energy business. I grew up in an energy family. You have no idea what's coming. The entire globe and financial economy is getting restructured, revamped, and possibly taken over. And this isn't fear-mongering.
Mm-hmm.
You're toast. And yeah, I have some investments that are down on my book of business, but guess what? We are killing it.
Mm-hmm.
Killing it in the real asset and commodity world. And it's not stopping anytime soon. We are in World War III, and it's the fight for metals and minerals and the future of finance and economy. And now the world just started dropping bombs.
Yeah, they've been saying for decades that the next great war will happen over resources.
It's over resources.
And nobody took it seriously because it sounded like a sci-fi novel. But
and look what happened with Jane Street and the market manipulation that happened on October 10th. And the reality is there are 12 other firms that were there with them. It's not just them. And now the banks are getting sued, and J.P. Morgan's getting called out.
yeah, I think we'll talk about that next. We'll talk about we've talked about the firm level. We've talked about the broker-dealer level. Next, we'll go a level up. We'll talk about the bank level.
Yeah, banking is going to be a very, very interesting thing. But these are the realities that are happening, and I don't know what to share with people, but your markets are going away. So what happens if you're a broker-dealer and an advisor and there's no longer a stock market and there's no longer a bond market?
Mm-hmm.
What does your life look like then?
That's an important question.
Right? And yeah, if you're a firm out there that has a ton of employees, I'm sorry, you could try to be as loyal as possible, but this next wave of technology is going to force them out. So you have to,
if anything, you're hurting your employees.
Future. Yeah, you have to think about what your future is in this world, in this industry. And the nail in the coffin with deglobalization and the broker-dealer space is they cannot, under current law, meet the needs of their clients when their clients start moving out of the United States. People with brains and wealth are leaving. So you have to be able to be multinational. Mm-hmm. And you can't do it attached to a broker-dealer.
I think that's the fundamental backdrop of how globalization has gone. If anything, it's not so much deglobalization as it's the next stage of globalization, in the sense that in the 90s they started, traditional globalization.
Yeah.
And then, what wound up happening was, the technology was developed as such and the international networks were developed as such where very quickly it spiraled out of control, and now people can do peer-to-peer transactions anywhere in the world. They can talk to somebody anywhere in the world. And, these old structures are very quickly becoming antiquated. And so the people that set this in motion are now being killed by the monster they created.
That's correct.
And it's beautiful.
And the other thing, too, is we went through it firsthand. We had investments we tried to do for one of our clients that likes to travel, spend 6 months out of the year somewhere else. Oh, we can't accept that DocuSign because it wasn't done in the U.S.
Mm-hmm.
And that unfortunately cost our client money on their taxes. And that was the nail in the coffin where I'm like, I'm not doing this anymore. And if you're an advisor, you're out there, this is in the back of your mind. So are you going to be proactive, admit it, and change? Or are you just going to die with and go down with the ship?
Mm-hmm.
Broker-dealers are the Titanic.
Exactly.
And the Titanic hit the iceberg.
Yeah, the iceberg has been hit. We're now watching the sinking. Yep. The boat is listing, so.
Digital assets, real assets, alternative assets.
That's the lifeboat.
That is the lifeboat and the raft.
Mm-hmm. And the blockchain is the other ship that came to rescue everybody.
Right. So
I love these analogies.
I say to everyone out there, good luck out there, because this is definitely like nothing we've seen before.
So join the collaborative. As always, be sure to like, subscribe, share, follow us on LinkedIn.
Go to our website, send us your email address. We'll put you on our content list. We try not to inundate everybody with content, but systematic, regular updates on what's happening in the digital assets in the wealth management world and finance. It's we'll have some interesting stuff coming out of some of the things places we're going to visit in the next 3 to 4 weeks.
Mm-hmm.
So keep an eye out, especially after I'm in Texas at the end of the month for a conference. That should be pretty interesting.
That's going to be a fun one, yeah, for sure.
Yeah.
But until then,
cheers.
Thanks for watching. Like I said, be sure to like, subscribe, share, follow us on LinkedIn, see our website, and yeah, hope to see you for the next one. Cheers.